Hey everyone! Today, I'm diving into the fascinating world of cryptocurrency market cycles. If you're a crypto enthusiast, understanding these cycles is crucial. So let's break down the difference between bull and bear markets. First up, the bull market. Picture this. Prices are skyrocketing, investor confidence is through the roof, and everyone is talking about their moonshot gains. A bull market is driven by optimism, positive news, and high demand. In this environment, prices can seem unstoppable. But remember, no market can go up forever. So, when the euphoria starts to fade, welcome the bear market. Here, prices decline, fear takes over, and negative news dominates. It's a time of caution and often panic selling. Bear markets are tough, but they're a natural part of the cycle. They can actually present great buying opportunities for those who stay informed and patient. So how can you spot these markets? For bull markets, watch for rising prices, increasing trading volumes, and positive sentiment. Keep an eye on news that can drive optimism, like regulatory approvals or major partnerships. On the flip side, bear markets often show declining prices, lower trading volumes, and negative sentiment. Be wary of bad news that can trigger fear and sell-offs. But here's the kicker: timing the market is incredibly difficult. Instead, focus on long-term trends. Diversify your investments and manage your risks. Remember, the crypto market is highly volatile. It's essential to stay informed and adapt to changes. So, what's the takeaway? Both bull and bear markets offer unique opportunities. Stay sharp, stay informed, and most importantly, stay patient. Understanding these cycles can help you navigate the ups and downs of the crypto world. If you found this video helpful, hit that like button and subscribe for more crypto insights. Thanks for watching.